Thank you for tuning in to another edition of the Vulcan Report. This end of day report is for trading on March the 8th, Wednesday, 2017. Looking at a chart of the gold futures, gold actually got pretty low again today. As you can see here on the weekly chart, gold hit a low of 1206.40. If you recall, I did warn you of prior support levels, key support levels in gold not found on charts or any other type of analysis. I was simply giving you what the algorithms were showing. If you recall, that was around the 1242 level, 1229, 1216, and 1206. Well, today that 1206 was tested. We went to 1206.40, but we didn't close there. We closed at 1208.10. $2 shy of that 1206 mark. Should the gold futures close below 1206, it would spell the end of the bull run and the beginning of a bear run that could extend well below 1150. I've been giving that warning now for weeks. And here we are. You can see that it's now well below the trend line support, which has now become trend line resistance around the 1220 handle. And here we are now. Market's just reopening, and so far it's down $1.20. All right, now I gave you the bad news first. Here's the good news. The good news is the market could catch a bid around between the 1206 and 1190-ish level. All right, just has to be careful not to close there, and then we could bounce as long as we keep closing above that 1206. The market could oscillate between that 1206, 1210-ish, something like that, maybe 1214. It needs to like maintain this equilibrium line here around 1214-ish. We're going to need to close above that, and then that way we can get into the ramp, and then the market can rally back and get back above 1250. So it's at a key area now. This 1206 is key area. Cannot close below that. Closing below that would bring in the selling pressure and momentum, and it would fall below the Kumo cloud on the daily chart, and you can see 1150s right here. All right, that's where we could go. And if we go there, it's going to be a key support area. Cannot close below there on a weekly chart. Excuse me. All right, so on the weekly chart, we're coming dangerously close now to some key support levels. We cannot close below. All right, so far, you got to close around the 1208 level. Cannot close below that 1206, because then that's going to open up the 1185, and then here you go to 1150. All right, so you don't want to revisit these lows, because if you do and they don't hold, then gold could drop $200 to $300 from here. It could be massive. All right, so we're do or die. We need to build support around this level now, the bottom of this Kumo cloud, and then come back up. That's what gold needs to do right now. If it doesn't do it, it is in jeopardy. So we'll have to watch it and see if bids will come into the market or not, or will something else transpire. A similar situation is brewing in silver, but not quite as vicious as what's happening in gold. On the weekly chart for the silver, we've closed below $18, which is critical for silver. So here we are below the $18, and we are now at $17.27. All right, so the critical area now is this $17.35 level. All right, we don't want to see closes below it, and so far on the weekly we have closed below it. That is a bear sign that could send the silver prices cascading all the way down toward the low $16 handle. We don't want to see that. So silver needs to also find support around this 1770 level so that it could build a base to get back above the 19 handle. So there's a few things transpiring right now and showing that the markets are in a state of flux. Crossroads, decisions have to be made. Battle lines have to be drawn. Likewise, I've also been warning you about the dollar along with the Bitcoin. I did warn you that 102 was at a very key area for the US dollar. And so far, we have closed below 102. You can see the momentum increasing going toward 104. If the US dollar closes above the 104, then yes, I do stand by my prior prediction of the US dollar closing around the 106 level by the end of the year, or even higher as possible. Likewise with the Bitcoin. I did warn you that GBTC was going to try to make a run for the 150 level, and so far we got as high as 139.50. We've now pulled back to 123.15. All right, so Bitcoin is waffling around at 1200 level, which is acting as a key resistance level right now. Now it touched the support trend line at 119.47. So as this goes, so does the Bitcoin, and Bitcoin is going to need to giddy back up and make 1250 its dividing line. If it can't, then it could oscillate for a while. I guess it's going to wait for the US dollar to catch up. But either way, that's where we are right now. There was some talk about the euro dropping below parity. For those of you that are not in the know, when we say parity or par, we mean 100. So here is the daily chart of the euro, and you can see we're at 105.91 right now, trading below the trend line. We're trading below the Kumo cloud on the daily. So we're bearish on the daily chart, and we are bearish on the weekly chart for the euro. 103.74 is the 52-week low. Are we going to crash below that? Right now, you could say that the market's trying to maintain some type of momentum, but every time it tries, it can't close above it on the weekly chart. It just can't do it. All right, so we're going to need a close above that 106.11. And we did it here, but we couldn't hold it. Now, so far, markets at trading below that 106 level. All right, it cannot do that. It's going to need to close above 106.12 this week if it's going to regain momentum and make a run back toward 107. If not, then we're probably just going to be flat to slightly lower prices, kind of moving sideways though, and this could elongate and extend a little while longer. So I don't think we're in jeopardy of crashing below just yet. Anything can happen, but I don't see it just yet. You would think, though, with the amount of bullishness in the dollar, that you would see more downside in the euro, but it's just not happening right now. So just something just to make note of and watch. All right, looking here at the crude oil market. Crude oil is extending its declines. It is in a negative pulse wave scenario, negative on the momentum on the weekly chart, and it should be noted that this is a new low. All right, we hit $50.05. So this market is very weak. It needs to close above $52.94 in order to put an end to the downtrend or the downslide of the momentum. It can regain momentum with a close above 52.94. But right now, I think it's just extending the trading range. We're still trading within this range here. All right, so this bar right here marks your range. So you're going to oscillate between, let's say, $52 and $44. That's just where you are. All right, so you're looking at about an $8 trading range. So a wide $8 trading range that's been going on for several weeks, as you can see. Okay, and until that trend changes, then we have to assume that as we get to the lower end of the range, the market will be defended, and then we'll shoot back up again. Something to watch for, though, in the crude oil market. All right, looking at bonds. Bonds have been also getting weaker as yields have been rising. Of course, lower bond prices equal higher yields. A higher yield is analogous to a higher interest rate. So interest rates increasing is what this is based off of. We hit a low of 147.09, which is a new low. Back here we were at 107.04 on the low, and today we hit 107.09. So the market is right now in jeopardy of taking out the 107.04. A close below 107.04 not only closes the door on the prior bull run, but it marks the beginning of the bear market, and it opens the door to the next leg down, which should be quite catastrophic. We're talking about getting into the 139 handle easily. All right, so bonds is something to watch. We'll see if the Fed is going to defend it or if it's going to allow it to pull back because they need to raise rates some more. We'll know. We'll see because they won't be able to maintain this. They can't maintain a higher interest rate policy if bond prices are increasing. So I'm going to say that I believe they're going to keep it like that. They're going to keep the pressure on, just not too much, but just on a gradual level. They'll keep selling and keeping the lid on it. All right, natural gas, you can see it's really been catching a bid these last 3 weeks. All right, it's above the momentum line of 289. 289 is the momentum line here. A close above 289 this week opens the door to that run back above $3, like I've been warning. So that's what's happening here in the nat gas. All right, let's see what else we got. All right, let's take a look at the NASDAQ. And I think we'll end off with the NASDAQ. Let's see here. All right, on the weekly chart, just slightly pulling back, profit taking. As long as the NASDAQ 100 can close above 52.94 this week, then we still maintain the bullish momentum, and there's nothing to even write home about on that one. The real wild card, though, is the GDXJ. Can GDXJ regain its footing? 37.20 is where we need to be. We're at 33.32 now. That's not going to cut it. We've lost bullish momentum. And right now, as we stand in free fall, the 27.37 low is in jeopardy. All right, that is the old low of 27.37 is in play. All right, that's where the price action seems to be heading. However, when you take a look at JDST, it's been struggling. It's been struggling to catch its footing here. It wants to rally, but it's been having problems. As you can see, it's been under some pressure. Not sure why that is with the GDXJ looking so weak. You would expect this to really catch a bid, but it's just not doing it. So it's interesting how we have a dislocation almost happening here. All right, GDXJ is falling off a cliff. This one's it's still red. It should be green, but it's not. So it's interesting how the markets are playing out. And you got a resistance level here, which corresponds also to the gaps, the previous gaps from way back. So I still say the target is still around the $30 level, but it's just not giving you too much to go on. This is almost like a buy and hold to get there. So to maintain its movement, it needs to close about $20.52 this week. That's what we need. So as long as it can do that, I guess this is one of those wild cards where you're gonna have to watch. The gold miners are the wild card. All right. So with that said, remember, Bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can, give nothing back. Peace. Close below 1206. It would spell the end of the bull run and the beginning of a bear run that could extend well below 1150. I've been given that warning now for weeks. And here we are. You can see that it's now. Thank you for tuning in to another edition of the Vulcan Report. This end of day report is for trading on March the 8th, Wednesday, 2017. Looking at a chart of the gold futures, gold actually got pretty low again today. As you can see here on the weekly chart, gold hit a low of well below the trend line support, which has now become trend line resistance around the 1220 handle. And here we are now. Market's just reopening, and so far it's down $1.20. All right, now I gave you the bad news first. Here's the good news. The good news is the market could catch a bid level 1229, 1216, and 1206. Well, today that 1206 was tested. We went to 1206.40, but we didn't close there. We closed at 1208.10. $2 shy of that 1206 mark. Should the gold futures 1206.40? If you recall, I did warn you of prior support levels, key support levels in gold not found on charts or any other type of analysis. I was simply giving you what the algorithms were showing. If you recall, that was around the 1242 level.